Hey everybody, Chuck Barone here on Tuesday, March the 26th, operating in the dark. I apologize for yesterday's fiasco. For some reason, I'm not getting any video, so I'm basically operating in the dark, which we kind of always did when we were making videos anyway. So it's just back to the future, I guess. But anyway, it's good to be back. It's good to have everybody here today. Again, I apologize for yesterday. I'm not the most tech savvy guy, being 112 and all. And I thought I was talking into dead air. I didn't want to do a show that had no video at all. Apparently, the only one not getting video was me. Anyway, welcome to the show, everybody. Again, Chuck Barone here. Today is Tuesday, March the 26th, 2024. And again, it's good to be back. All right, so let's talk about, first of all, my new spot here. I'm doing the video from my home office today. I hope everything's good. I think I might have a little bit too much light from these windows. So let me tighten these blinds up a little bit here. There, anyway, I forgot to bring my light from the office. Anyway, I'm just Chuck Barone, guys. Anyway, let's talk about the world going on. It's all kinds of crazy stuff happening. I had such a beautiful show written up yesterday. I want to get into some of the stuff I didn't do yesterday today. And anyway, let's talk about these markets, guys. So the stock market today, truthfully, it's going to be a very strange week. The big day for data is Friday. Friday happens to be Good Friday, the Friday before Easter, and it's the day the markets are closed. So all this data, big news is going to come out on Friday, and the markets won't be able to react to it. To have Friday, Saturday, and Sunday to think about all this stuff. So Monday is going to be a wild one, depending on how that data looks. So this week is just going to be kind of, in my mind, just a holding pattern. Stocks will go up and down, but they're pretty much not going to make any real kind of move until they get some data that tells them to make that move. Anyway, so markets today, basically a blah, nothing burger. The Dow falls 30 points. The Dow sitting 39,282. The NASDAQ falls 68 points, 16,315. The S&P down 14, 5203 on the S&P 500. So markets across the board down today, but these numbers are pretty insignificant. I'm guessing tomorrow they'll be up around this much. Like I said, just a holding pattern until next week when the markets get all of the data they need to kind of figure out where the Fed's going. Bond market today, again, like the stock market, in a holding pattern. The 10-year falls 1 basis point, sitting at 4.23%. The 2-year unchanged today, 4.59%. So the bond market on hold as well. The dollar up very small, just 6 basis points on the index, 104.28 for the dollar. Precious metals today having a mixed day. You had gold gaining $6.70, sitting at $2,178.30. Nice number, gold. Silver falls 28 cents. $24.46, having some difficulty getting steady, getting strength above $25. I would like to see it get back above 25 and hold that. We'll be on top of watching that as well. Oil today, same thing, holding pattern, down 44 cents, $81.51 for a barrel of West Texas Intermediate. Not much happening there. Bitcoin falls $1,446, 69,448 for Bitcoin. A great number. Bitcoin doing great. I'm telling you guys, this now, I've seen some people really making some wild estimates on how high Bitcoin could go. I'm not going to get on board that kind of crazy, but I tell you this, guys, 100,000 is certainly a reasonable number to expect Bitcoin to hit, especially when the mainstream really starts getting into these ETFs. All right, so let's talk about news today. I wanted to talk yesterday about this idea of no landing. Okay, so we've heard soft landing, right, where basically the Fed can raise rates but the economy won't going into a recession. And we've heard about, all these different phrases. Now, what Wall Street is using is no landing, where basically we're going to have the economy going along just fine. We're going to have inflation rates higher than we're used to, than we want them to be. And that's what their consensus is believing is going to happen now. I tell you guys, if you look at all of the writing on the wall, right? You've had an inverted yield curve for a record amount of time. That an inverted yield curve for a day indicates a recession coming when you've seen it inverted for almost 2 years. Last time it broke the record, that was from 1978, and we know how wonderful things were for the economy between 78 and 80, right? Or even between 78 and 83. No landing. No, it's going to be when you hear soft landing, when you hear no landing, when you hear, these nonsensical terms, it always means the same thing. Crash landing. I've joked about it many, many times. I say, when you hear the word soft landing, no landing, this silliness, figure what it really means is the Hindenburg. Picture the Hindenburg landing and boom, not good, right? All right, moving on from that silliest concept. These guys just want you to believe the dumbest stuff, right? Harvard University and Lawrence Summers come out and they're basically say the Fed's a bunch of liars in a nice academic kind of way, saying that the way they measure inflation right now is completely bogus, echoing many times what we hear about, we hear from viewers on this show in the comments. Summers says if they used the old inflation measure that they had used 83 and prior when they changed it all around, inflation would have peaked at 18%, not 9%. Inflation rates today would be significantly higher than what they're telling us they are. And what's the big difference? What did they do to make that happen? What they did was they took out the cost of money. So when the Fed raises interest rates, it raises the cost of everything you borrow to buy. Houses, cars, credit card debt, everything goes up interest rate wise. Well, that's inflationary. Payments go up with it. And they didn't want that reflected in their inflation measure. So they took out the cost of money. Well, here's the thing, guys. When you see a house that was $300K at 3%, the payment was, $1,600 or $1,700. And now that same house at 7%, the payment's, $2,800. That's a pretty big inflationary move that they're not talking about in these measures we're getting. So he certainly makes a point that that measure is probably way more accurate to why people are feeling so unhappy right now with this economy. The things that are attached to debt, houses, what went up? Housing costs, rents, like crazy. Cars, we talked about that on the show many times, how the average payment on a car now is over $700 per month. And so many people have car payments over $1,000 per month, which is, in my mind, complete insanity. So, when a car used to be $500 and now it's $1,000, that's a pretty massive inflation. You used to be able to rent a house for $1,500, now it's $2,200. That's a pretty big inflation. So, interesting story by Summers. You can look that up. It's been all over the internet. These Harvard guys basically calling the Fed out. Interesting stuff, right? Today we got some data. The durable goods order surprising the market. Durable goods coming up significantly higher. Yeah, I know. I got my lighting is not so great in this room, and if I open the window, it just creates a glare. I'll have my light behind the camera tomorrow, guys. So forgive me for that today. Just working out the glitches of changing the place where I'm doing these videos, and we'll get all the kinks worked out. It's always going to be some in progress, this show. We're not the most finely produced. We're certainly not going to be confused for a TV show or for, some of these other finely produced videos. What you're getting here is a straight deal. If you're looking for really high gloss production, sorry. Anyway, durable goods orders surprising the market up today bigly. Consumer confidence, we got that number, came in basically unchanged. Consumers still feeling super grumpy. This was interesting today. I saw that there's 19 Fed governors. 4 now of those Fed governors believe that the Fed funds rate at the end of the year will still be over 5%. Interesting, right? I was telling you guys, if the Fed can cut rates in June, which the market consensus is they will, I got to see some data first. But anyway, if they can get that rate cut, when will they cut again? Do you believe they're going to cut in the middle of a big election between Biden and Trump? Because if they do, everybody's going to scream bloody murder about how they're trying to help one side or the other. So I really don't believe they're going to be in the rate cutting business during this election. The election is in November, so they might be able to get a rate cut in November, especially if they plan it to do that way. But do you think they're really going to do 3 more rate cuts this year? I got my doubts about that. Okay. Now, Friday, as I've been saying, Friday is the big day for data. It's Good Friday, unfortunately, so the markets will be closed. I think I'm going to still do a show that day anyway, even though I won't have stocks and bonds to report on. I think I'm going to do a show that day just to talk about the data that came in and try to get in front of what will happen Monday, what I see that data meaning, and how I believe the market would react to that data. Okay. So anyway, Friday we get the PCE numbers. Okay. Now the Fed doesn't like CPI anymore. They like this personal consumption expenditure thing. So here's what they're expecting. Now this is really strange. They're saying that the top line PCE, okay, top line will be up 0.4%, but year over year will only be 2.5%. I don't know how they come up with that math. They said core PCE will be up 0.3%, but year over year, core will be 2.8. Well, that's significantly lower than the CPI numbers we've been getting. So it'll be interesting to see if, number one, they can get these numbers. I'm not doubting the monthly jumps. I'm not doubting those. Okay. But the cumulative numbers, the year over year numbers, I just got to see how they're going to get it to 2.5. Nobody's going to believe that. We all know gas prices are up. We all know oil prices are up. We all know precious metals are up, which drives up a whole bunch of stuff with it. Gasoline going up raises the cost of everything, because I don't think there's anything that gets sold in this country that isn't trucked somewhere along the line. I don't know, guys. I think I might be in the Summers camp here, where we might be just getting bullshitted a little bit. And hopefully these knuckleheads won't take us over the cliff with them, because it doesn't seem like they have a real firm grasp on where they're going yet. These guys at this level, okay, a guy like Powell, St. Jerome, the miracle worker, these guys, what they worry about, they're so rich and so powerful. They have everything that a person could want in life, except more. And, what they're concerned about is their legacy. It's a legacy thing, right? I want to be known as a great Fed chair, a Volcker. I want to be not known as a crappy Fed chair, a Burns, or even a Greenspan. Legacy is huge to these guys. And I think that, Powell, if his legacy is really a concern, he's going to worry about the overall effect with his policies are going to inflict on the people. And, we can see that they're not really doing well. Now, the political class and the Wall Street class can believe anything they want, and they can trade and do anything they want. But we look at what's real here and what people are dealing with every day. Now, I'm a guy that, I'm pretty comfortable in my life. And I'm telling you, I'm feeling this inflation. You know, my power bill is just killing us every month. My gas bill basically doubled. And you can see on this gas bill, my usage is the same. Now, I don't remember the Public Utilities Commission okaying a 100% increase on gas prices. And these gas companies are the best because, you know, when things spiked, when they invaded Ukraine, the Nord Stream pipeline got blown up, and all the natural gas was, you know, that was the big topic of the day. Natural gas spiked up to over $9 on the commodities chart. Now they go by 1,000 BTU, British thermal units, or something like that. Now it's down to $1 and change. Well, they hurry up and raise it, but guess what? It's down multiples, but the gas bills are up. So we got, you know, prices, let's face it, prices are just not going to come back down to where they were pre-pandemic. This is a new normal we're going to have to live with. So now people are really going to start paying more attention to what's happening inflation-wise, because the cumulative effect is already so dramatic, we can't stand even anything more added on. Anyway, guys, that's it for the day. We'll be back tomorrow to bring you guys the news you need. I apologize for the gloomy backdrop here. We'll get this tightened up tomorrow. I'll go to my office the second this show is finished and get that light here. I can't believe I forgot it. I'm a knucklehead. Anyway, we appreciate your guys' support as always. If you can, hit the like button. It helps us get more views. Hit me up in the comments. I'll be online today messing with you guys. Hopefully somebody will have something nice to say, something funny, something good, or whatever. Anyway, guys, always a privilege to be able to talk with you guys, to have you guys here on the show. I hope the information you're getting from me is useful. Again, we'll be back tomorrow to bring you the news you need. Until then, guys, you take care. Thanks.